What's up, small business owners? This is Andy Parrish from Alternate Solutions Consulting, and today I want to talk about tax reform, what's going on in Washington, and what business owners can expect as we enter into this new administration and new Congress. I have some notes here on my computer, so if I'm looking away from the camera, I apologize. I've got some things typed out. But as you may have heard in President Trump's inauguration address, he wants to usher in a golden age of America. Now, whether you agree with this rhetoric or not, you have to know that the administration sees tax reform as one of the key drivers of the economic engine that they want to get going. Okay. As you also may know from talking with your CPA, the Tax Cuts and Jobs Act is set to expire at the end of 2025. If Congress doesn't do anything about that, both individual and corporate tax rates will be going up. And everything I'm picking up and everything you're picking up down in Washington says they want to create a business-friendly environment. So they need to get a deal done. They want to get a deal done on this. The question is, how does that happen? And what does it mean for the average small business owner? Okay, so we're going to get into that right now. Now, in terms of the mechanics behind this, the president has called for one big, beautiful bill, which would be able to pass the House and Senate on simple majority, and it would include a lot of the provisions I'm going to talk about. Other members of Congress have wanted to segment it into different bills, smaller bills. That would take longer. The president doesn't want it to take a long time, but we're keeping an eye on it to see how it happens. I'll say this, the last thing that I've heard is that Speaker Johnson wants to get tax reform done by the beginning of April. I expect that timeline, there'll be incentive to accelerate that timeline, especially considering with what happened with DeepSeek last week and China seemingly advancing upon us in the AI game. So anyway, that's sidebar. So let's get to my notes here. What would making the Tax Cuts and Jobs Act permanent mean for a business owner? Okay, one, tax rates for corporations would remain at 21% or lower. Okay, the president has hinted that he'd like to bring tax rates down. That would add a lot of spending to any tax bill, and the Congressional Budget Office might have something to say about that. So we'll see if a corporate tax rate actually goes down. The qualified business income deduction. This is something that was created in the Tax Cuts and Jobs Act, which allows pass-through company owners of certain companies to reduce their income by 20%. So this was done to allow pass-through company owners to benefit from tax deductions in the same way that corporations can, because pass-through company owners pay personal tax rates which are higher than the corporate tax rates. So expect the QBI, qualified business income deduction, to stay. 3, expect 100% bonus depreciation to be brought back. Right now, we're in a regime where all real estate and asset purchases and anything that you want to bonus in terms of deductions is being stepped down from 60 to 40 to 20 over the next 3 years. 100% bonus depreciation would allow you to bring back the full benefits of something like cost segregation, to where you can accelerate parts of a building into less than 15-year recovery life, thus making it eligible for 100% bonus depreciation, thus leading to bigger tax write-offs. So that's big for building owners and real estate owners. Another point, the gift tax exemption will remain at $13 million or higher. This is important for business owners that are looking to gift any interest in their business to their children, doing succession planning and things like that. If Tax Cuts and Jobs Act were to expire, that would be brought down to, I think, $5 million. So you're talking about orders of magnitude in difference. So that's something that business owners could definitely keep an eye on. Last, and probably most importantly for the software, tech, and innovation space and companies in those areas, is you will no longer have to amortize your R&D expenses. So if you're a software company, you probably know that over the past 2 years, beginning in 2022, you lost the ability to deduct the expenses you have, which are labor, materials, contractors, that are associated with R&D, developing new software, developing new products. This is obviously a huge negative for the most innovative businesses in America because you lose the ability to deduct R&D items, and you have to now treat them as a balance sheet item, which adds phantom income, which increases your taxes artificially, and has now led to America being the most expensive tax regime for research and development in the world. So expect that to change, because if you're going to beat China in the AI game, you're not going to be able to do it by having the worst R&D tax environment. If you're a software company and you have no idea what I'm talking about right now, you probably should look at who's been doing your accounting and tax work, because this has definitely been an issue that would have affected you in the past 2 years. A bonus benefit here is last week, Trump announced that there was going to be a permanent hiring freeze on the IRS. Now, I will say that there definitely needs to be referees in the tax game, right? But we have observed the IRS getting increasingly aggressive with small businesses in recent years. Expect the tone and tenor to change in that agency as this administration tries to create a more business-friendly environment. So that's all I have to say. There's obviously much more. We'll be keeping our eyes on Washington, and we'll be keeping our clients updated. If you'd like to connect with me or my team on any of this, feel free to reach out to us at 401-949-5200. I'm Andy Parrish. Thanks for watching, and I'll be back with more videos. Cheers.